All right, let's get right into it. A massive new bill just passed Parliament, and it's about to completely shake up India's insurance world. We're going to break down what this means for the industry, the economy, and most importantly, for you and your family.
So, the big question, right? Why should you even care about this? Well, simply put, the rules for your health insurance, your life insurance, all of it are getting a major overhaul. And trust me, it could mean more money back in your pocket and way better options to choose from. To really get a sense of how big a deal this is, think back to the 1991 economic reforms. They literally changed the game for India. This new bill? It's being talked about in the same way. This isn't just some small tweak. It's a massive foundational shift for your financial security.
Okay, so if it's such a game changer, what's actually changing? Well, it really boils down to two huge components that are grabbing all the headlines. Let's break them down. So the official name of this legislation is the Sabka Bima Sabki Raksha bill, which translates to Insurance for All, Protection for All. It's already been passed by both houses of Parliament, so this is happening. It marks a huge step forward for these long-awaited reforms.
First up, and this is a really big deal for the industry, is the limit on foreign direct investment, or FDI. It's been raised from 74% all the way to 100%. What does that mean? It basically blows the doors wide open for global insurance giants. They can now have full ownership and pump way more money and expertise into the Indian market.
And now for the second massive change, the one that's going to hit your wallet directly. It's the complete removal of GST, the goods and services tax, on health and life insurance premiums. Yep, you heard that right. That 18% tax, it's going down to zero. Gone.
So you've got 100% FDI, a ton of new money flowing in. What does this actually mean for the insurance companies themselves? Well, the whole industry is basically bracing for a major shakeup.
And to put that into perspective, even with the old limits, more than 82,000 crore rupees of foreign investment had already come into the sector. Now, with the floodgates completely open, experts are predicting a massive surge of fresh capital. We're talking way more than this.
And all this new money? It's going to set off a chain reaction, for sure. We're talking about intense competition as these big global players jump in or double down. That's probably going to lead to a wave of mergers and acquisitions as companies try to get bigger and stronger. And to compete, they'll have to invest in new tech, think AI for faster claims, and we'll probably see a whole new focus on areas that have been ignored, like insurance for smaller towns and rural areas.
Okay, so that's the industry side of things, but let's get to the most important part, right? How does all of this actually help you, the person paying the premiums?
Let's start with the immediate savings from getting rid of GST. The math is super simple. Say your base premium was 50,000 rupees. With that 18% GST, you are actually paying 59,000. Now, you just pay the 50,000. That's a straight-up saving of 9,000 rupees. That's real money back in your pocket.
But hey, the benefits go way beyond just the GST savings. All this new competition means insurers will have to fight for your business. And what does that mean? Lower premiums for one. You'll also see way more choices, a bigger variety of products. And with all the new tech, you should expect better, faster customer service and, fingers crossed, quicker and more transparent claim settlements.
And the innovation isn't going to stop there. This competitive pressure is going to spark a whole new generation of insurance products. Just imagine plans you can actually customize to fit your life perfectly. Or car insurance, where what you pay is based on how much and how safely you actually drive. The market is about to get a whole lot more creative and personal.
All right, let's zoom out for a second and look at the big picture. How does this all fit into India's larger economic strategy? Because this isn't just about insurance, It's a key piece of a much larger puzzle. See, the government has this really clear long-term goal, insurance for all by 2047. This bill is basically the engine designed to get us there. The idea is to make insurance more affordable, more accessible, and honestly just more attractive to millions of people who don't have it today.
Because when you have a stronger insurance sector, it creates ripples across the whole economy. It makes our financial markets deeper. It helps bring financial services to smaller towns in rural India. It makes India look like a much more attractive place for global investors. And ultimately, all of that helps drive economic growth and create new jobs.
So, Parliament's given it the green light. What happens next? How long until you actually see these changes roll out? Let's quickly walk through the final steps.
The process from here is pretty straightforward. Now that the bill passed both houses in December 2025, it heads to the president for the official signature, which makes it an act.
After that, the government will issue a notification saying exactly when it all kicks in.
And here's a date you're going to want to circle on your calendar. The GST exemption officially begins on September 22nd, 2025. That means any renewal payment you make on or after that day for your health or life insurance will not have that 18% GST. Big difference.
So as we wrap this up, it's pretty clear this is a landmark reform. It's huge, but the real measure of success, it isn't just going to be about how many new companies enter the market or how much money comes in.
The real test is going to be whether our claims get settled fairly, whether the products are actually easy to understand, and whether you, the policyholder, feel protected when you need it most. Because at the end of the day, in the world of insurance, trust isn't just a nice to have, it's everything.